Good morning, good morning. How's everybody doing today? It is Tuesday, 9:30 a.m. Glad that you made it out to join. We're going to look at the markets today. We're going to look at the positions held by the banks and look at the adjustments that they made to their positions to see if we can determine what is likely going to take place with price. So I sent out a report to members and students this past weekend, a very detailed report in what we are expecting, and a deep examination of the latest reports, data, and what it means and what we could take from it. So that was filled with a lot of information, stuff that I will go over with today, but not all of it in detail, as I want to leave some of the information that I share for members and students only. Alright, so first of all, let's take a look here. I'm going to open up the data that was recorded. Okay. Let's adjust this. Perfect. Okay, so first let's start off by taking a look at gold. So gold is one that we've been watching for some time, and it's also one that's been heavily manipulated by the banks, as we have been pointing out. At the going long, and then at the lows they come into going short. I mean, it's constantly back and forth. And so if we take a look at what they are currently at in terms of retail positions, we can see that right now, let's take a look. Here it comes. Right now they are mostly short. Okay, so here you go. Retail traders are mostly short, and they really got them in short at the bottom of price. Okay, right down here. Okay, with that spike down, that's where they really suckered them in. Okay, to get in short. You know, you have these big moves, big candles to the downside. It looks extremely bearish. You know, everybody's assuming that it's going to do this, you know, at that point. And nobody wants to miss out on that opportunity. So what they do is they jump in full force. But that didn't work out too well for them, as you can see. And so as they were luring in their short trades, we take a look here and we can see the banks, they helped by dropping price, increasing short positions from 76,000 to 108,000. That's super aggressive. Okay. So as they were increasing their shorts from 76 to 108, it caused price to drop. But the whole time we were talking about this area of demand. Okay. And unless that area of demand gets taken out, demand is still in play. So we still got a demand zone that's in play. And unless institutional demand gets taken out, we should not expect it to be taken out or assume it's going to be taken out and start getting into short positions. That is totally the wrong way to trade. Now, I've mentioned this time and time again, and I will continue to mention it because this is some of the most important things you have to remember when it comes to trading. Okay, is that unless something happens, you don't assume it's going to happen. Right? There's times we can anticipate something is about to happen, but that's because, you know, the chart is dictating that those things are going to take place. But in this situation, gold had a major area of demand in play. Okay, and it had not been broken. It was holding. So even though the big drop took place, I mean, that looked like a very bearish candle indeed. You know, when price looked like that, sure, it looks like it's going to break. But that happens a lot. That happens a lot, where it creates a candle like that, and then next thing you know, it reverses up like this. And as you can see, this area of demand is still holding quite nicely. All right. So yes, they drove price down. That's for sure. And then you had the news coming in and helping with that. Okay, the news came in and helped to drive price down like that, because let's show you here. Where are you? Right here. You have news like this. Okay, is that the one? No, that's not the one. Just bring it up. Okay, we have news like this. Gold prices dropped. This was on the 12th. Okay, this came out on the 12th. And the 12th is right here. Okay, this is the 12th here. So price had already made its drop. And in our forecast, in our forecasts on the EURJPY report, what we stated was that if the daily area of demand got removed, we would see the 1700s. And that's exactly what took place. Daily demand was removed and the 1700s was hit. Okay? But after that initial drop, when they started to stabilize price, I mean, this was a few days of the institution stabilizing price. And then they come out, CNBC, and says, you know, he predicts gold to 1700 per ounce by the first quarter. And then Schneider forecasts that gold could see drops to $1,600 per ounce. Okay, well, $1,600 is way down here, and price did not get there. But after you see this big spike to the downside and then price stabilizes, you know, you see some so-called expert coming out saying that price is going to be dropping to 1600s. You thinking maybe I should be selling this rip to the upside for another move to the downside. So now you see a lot of retail traders are in short. Okay, unfortunately, and like I said, caused by the banks selling and dropping price. So if we look at long positions, we can see that they are somewhat still sitting up in the 270 area. Okay, they haven't really moved, and overall there's more longs than there's shorts. Okay, I mean, that's pretty clear. There's definitely more longs than there is shorts in terms of the positions held by the banks. And but this increase in shorts here, it causes the sentiment to slightly go more into bearish territory. But that's okay. That's okay. This will happen when they adjust positions in order to get something to happen. All right. So they increase their shorts from 76 to 108, which causes price to drop. Longs are still remaining. They pumped up to about 277,000. It's still a long way from the 408,000 that is the average, or sorry, the highest amount that they've had. Shorts are well above average, but that's okay because they increase it for a reason. So what is going to take place next? Well, we are talking about this, and the key chart to be looking at is this daily chart right here. Okay? Because what we can see is that the banks created some major supply here. Okay? What is this supply and why is it significant? Well, this supply is the supply that they created, okay, as they were dropping price. When they dropped price, okay? They dropped price down all the way to this area here. And the original area where they filled in the supply was up here. So what does that tell us? That tells us if the banks are actually serious about dropping price down a lot lower, where do you think they're going to reaccumulate short positions? Okay, so we already see that they increased shorts from 76 to 108. If they're going to continue increasing their short positions, where do you think they're going to do that? Okay, it's right here. All right. Now, if you guys have just recently joined us and you're interested in supply and demand trading, make sure you like and subscribe to our channel for future sessions. All right. So getting back to gold, right here, we're just a few pips away from hitting this supply. Now, if the banks rally price into supply like this and they start shifting momentum, if the data comes out and we see that they continue to pile into short positions, then it's likely they are going to use this area of supply to facilitate a move much lower. Okay? Otherwise, if they come into this area of supply and they remove it, what does that tell you? You think that tells us that the banks are interested in continuing to push price down? Answer is no. All right? That means that they're not interested. How is supply or demand removed? Price blowing through those levels? Yeah, zones are removed when price trades through those levels. Yeah. So it's like, you know, if the banks fill in a big portion of sell orders over here and price drops, when it retraces, if they want to continue pushing price lower, they will continue to fill in more short positions from this area. They either have one of two decisions: use their zones of buying or selling to continue buying or selling, or remove those areas that they had for something different to take place. So it's one of those two. So this is what we're watching, is that chart. Okay, key chart. All right, so now we have oil, and oil hasn't been doing much. Oil hasn't been doing much, and considering the economic news, I'm a little bit surprised by that, but you know, you never know. But what we do know is that they were profit taking on long positions at the highs. Okay, and so we were talking about this, that price was coming up here and it peaked out here, and we mentioned very likely they're going to start taking profits on long positions because they were accumulating longs all throughout here, and it was about time that price gave us a little bit of a pullback. So that's what they've been doing here. Okay, so this drop here is profit taking. Okay, now how much more profits are they going to be taking? We don't know. And are they going to start increasing short positions to cause price to drop? That's also a possibility. But if we look here, we can see over the last few weeks, they've slightly increased their shorts. In fact, you know, since back here, we can see that late June, they started increasing their short positions. 137, 144, 151, 152, 155. So a nice slowly increase in short positions as this was taking place here. All right, so that's a good sign for a further move to the downside. And while they were doing that, profit taking on long positions. So that's what's really been fueling this move. But like I said, when they are taking profits on positions, it usually just causes price to, like taking profits on long positions would cause price to drop. But it's not necessarily going to start creating formations that would be created if they wanted to start dropping price. And what we're seeing here on the weekly chart is not very strong in terms of price about to continue dropping like that. Okay, we want to see more evidence for price to drop even further, and so far it's not very strong. There's chances that price will continue to the downside, but we want more evidence of that. Okay, so moving along, we have the US dollar. US dollar is contacting supply. And we had an event take place a few weeks ago with NFP, which lured retail traders into buying. Okay? Right? Because NFP came out and NFP was positive, and that happened to right here. NFP was positive, that lured retail traders into buying, and then they reversed price. And that happened as retail traders were lured into buying. It also suckered in euro traders into selling, which caused this drop here in price. Okay, so that's what that drop was all about. Okay, Euro traders being lured into selling. And now, if you take a look at the positions being held by Euro traders, oh, now they've switched to long. But this was short. This was short, okay? So as price was rallying, they had to get out of those short positions at a loss, okay? And now they're getting into long. I mean, it's just unbelievable. You know, when you see what traders are doing, it's just non-stop trading. Those traders that just need to trade every single day, they're getting in short here, and then they're losing money here, and then they're getting in long here, and then they're losing money on those long positions when this happens. I mean, it just is, it's never ending, okay? Because they constantly want to trade, they're constantly losing. You know, you may win a little bit here and there. You might get in here long and then get out some long here and make a little bit of profit, but then you get in a little bit more and then it goes against you. I mean, it's a disaster. At the end of the day, you're not making any money and you're likely losing, okay? So getting back to the dollar, we can see that the institutions increased some of their shorts from 14 to 16. Not a big increase, but it's an increase. And that was as price was rallying up here, okay, back into supply. And long positions increased 33 to 35. So bottom line is, what's the coloration of the sales here? Okay, it went from bearish, and it's more neutral now. Neutral with maybe a touch of bullishness, okay? But beware. Don't take that bullishness and think that just because it's somewhat bullish that price is going to rally to the upside. Remember, they're causing a lot of manipulation here, okay? They're manipulating people into trading. They're manipulating people into taking positions, all right? Like this big rally up. You don't think people are buying the dollar right now? With this rally up, right? And what are we rallying up right into? Okay? An area of supply created by the banks. So you know what the likelihood is? The likelihood is price drops. Okay? Can it rally a little bit higher and test this daily supply a little bit higher? Yes, it could. The dynamics are such that that could happen. But bottom line is, whether this supply is in play or this supply is in play, the bottom line is supply is in play. Supply is the dominant force that's in the market right now in terms of the dollar. So if you're buying, you're in trouble. Okay? You should not buy unless there's demand that is in play, or the dominant force is demand, or there is no supply that is in play whatsoever, and price has just left the dominant force of demand. Okay? That is when you should buy, not in cases like this. But there's a lot of traders buying the dollar right now because of this rally. And Aussie, we see a big increase in shorts. Big increase. Look, 99 to 106,000. Okay? And what have we been saying about that? Okay? That supply is in play. Price dropped, fell short of hitting demand. It's not typical that that happens, so it's likely going to continue lower. And lo and behold, look what we're seeing right now. Okay? You see what we're seeing right now? You see the weakness? This is what I've been speaking about. Okay? That price was still likely going to continue lower until it contacts the opposing demand. Okay? So this is happening now because of the strength in the dollar and the weakness in the euro. This is why we're seeing this drop here. This is what's normal. Normal is monthly supply gets hit, it drops to monthly demand. And why is that? Because price is in the range. Okay? Price is ranging on the monthly chart. And that's what typically happens when price is ranging. All right? And look at that. Price rallied into supply. And now it's dropping. Okay? And it should continue to drop until monthly demand gets contacted here, the 71s. 71.5. That is what is likely going to happen. Okay, let's look a quick look at the Aussie CAD. Yeah, we're getting that weakness to continue. Monthly target is on track. Look at that. Okay, still on track for that monthly target. 0.8858. That's my monthly target. So looking good so far. Looking good. All right, so yeah, so that's continuing USCAD. We got supply in play. Let's take a look at how much pressure to the upside we're getting. Yeah, I posted a video on Twitter. If you haven't seen it, you should take a look at it. It was in regards to some analysis that we did with the USCAD right here. And here's the situation that we are talking about, okay? About this area of supply on the daily chart and it breaking to the upside because of what we were examining, okay? You didn't see that? You should be following us on Twitter as well, okay? Not just a Telegram channel, but you should be following us on Twitter as well, because I post things there as well as on our Telegram. But that's what's happening now. Is that a major area of supply created by the banks at 8s and higher in the coming weeks, right? Potentially. At the end of the day, we still have supply in play. Let's not forget that. So looking at positions, not much to say here. Okay, they've been decreasing their positions. Their overall positions have gone from highs of 106 to now 84. So they're not really doing anything, and sentiment is neutral. So again, as I've mentioned numerous times, when the sentiment is neutral, be very careful about opening up positions. US Swiss franc, there's a slight bearish bias. Let's take a look really quickly at what the chart's doing with that bearish bias. And again, it's still in a range on the weekly chart. Not much to see there. Euro, so we're back to the euro. Let's take a quick look at the euro. So there's a weakness coming down into demand. And let's take a look. We got pretty low inside that demand zone, but it's now reacting from institutional demand. And likely we're going to see a push to the upside. Likely, okay? Not guaranteed, because again, we have many areas of demand that are playing out right now, okay? So lots of things can play out. It can go a little bit further and then reverse, but the odds are we see pressure to the upside from here, okay? So you take that knowledge and you do what you will. Euro Japanese yen. I am in short this one. I got targets lower. This is one that's on my personal account. And here's my target here, 127.40. I got up a little bit higher just after this break and then rally. I got into some shorts. My stop is above here and I'm targeting a little lower. So that's playing out quite well. The idea with that one was we were seeing a lot of evidence to suggest that the euro was going to be getting weaker. So we did that, or I did that. And also I was looking at US dollar Japanese yen and seeing a lot of weakness on this chart. And that is the ingredient necessary to cause euro Japanese yen to drop. Okay, was that. So still watching for a continued drop on the euro yen. Pound, not doing much. Let's see how it's reacting. We saw a recent drop in the euro, and now pound is dropping as well. Okay, nice drop into demand, just like euro. So we'll see what it wants to do with that. US dollar Japanese yen, big increase in longs, 85 to 97. Shorts, 30 to 36. So shorts not doing much, but at the end of the day, we don't have any strong direction. We had bearish here, bullish here, neutral here, okay, and it's back and forth, neutral, bullish, neutral, bullish, neutral, bullish, all throughout here. So no real strong force coming in to the market here. Hey Kev, do you use pair correlation in your trading? Absolutely, absolutely, 100%. We use the COT report to determine the strength of each currency. Then we look at the supply and demand dynamics on each of those major pairs. And then we use that to determine what direction price is going to take, likely going to take. and what does that mean for each currency, strength or weakness. And then we look at that and compare that with the cross pairs on the charts to determine what the cross pairs are going to do. Sometimes the majors are not giving us any strong indication of what's going to happen, and that is when we will choose other cross pairs to determine what is likely going to happen with price by looking at the cross pairs. Now, we've known Aussie CAD weakness was was a big theme that we were looking at. So that meant Aussie weakness and CAD strength. And when we look at the US CAD chart, we saw that for it to be strong, it had to drop. We knew that overall there was a heaviness to price on the US CAD. And that heaviness was going to, over the long term, make the Canadian dollar strong. And we also knew that as the Aussie US dollar was reacting from supply, and it hadn't hit opposing demand, that it was likely going to be more weaker. Okay, so that helped us to determine the weakness in the Aussie. Same thing with the Aussie Japanese yen. Okay, we saw that price was starting to reverse on the higher time frames, and there wasn't demand until lower on the charts, which meant that it was likely going to continue lower. And Aussie Kiwi, these two have both been somewhat weak, so it was difficult to gauge the strength of the Aussie or the weakness from the Aussie by that chart. But we had looked at the cross pairs, and it helped us to determine what was going to happen with the Aussie. And last is the Kiwi. This is another one that we've been watching. It typically does what the Aussie does. And we've been seeing the fact that it was sitting in demand here on the weekly chart, just like the Aussie was doing. But again, if we looked at the monthly chart, we saw that supply was the dominant force and demand had not yet been hit. So the likelihood was that price was going to drop over time until it contacted some demand. All right, and that's about it. Okay, that's about it. So take that, do what you need with it. You know, we could look at. You guys want to take a look at euro pairs to see a little sampling of how we do some correlating with the markets? We can do that. Okay. Why don't we hit the like button? Again, if you're new to watching our live broadcasts, make sure you subscribe. Subscribe and hit the bell icon, the notification, so that you get notified next time we have live sessions. We don't always do them every single day at 9 a.m. I do the best I can. It is summer, so I like to get outside and do other things, and I have a busy schedule. But come the colder temperatures, we'll be doing more regular sessions every day. Okay? So hit the like button if you haven't done that yet, and hit the subscribe button for future sessions. Okay, so euro, right? So what were we talking about in terms of the euro? Look at the euro, and what do we see? Well, what we see is we are currently inside a demand zone. All right. So the first thing I'll point out is that, you know, there could be trading opportunities. It's risky to just buy it right now. I mean, you could do that, but you have to know the risks involved in that. And there are risks involved in that. Okay. Another thing that you can do is, let's take a look here. Just do some analysis here for you. Okay. So here's a 15-minute chart of price sitting inside this area. Now, here's an area here, a very strong imbalance to the downside. Okay? Down into this area of demand. And now we can see that price is just stalling. So if price doesn't do anything except for rally up from here, what I would be looking for in terms of an entry is something where this area gets removed, and then I'd like to see a strong imbalance somewhere down here. Okay, a big imbalance. So basically the opposite of what we have here, but to the upside. And then a pullback into that area for a long position. Okay. That would be a safer way to trade this, okay? Because again, you don't want to just get in long right now. I mean, you could, but there's risks involved in it. All right. The dynamic of the chart is not very favorable for just getting in blindly long right now. Okay. So we're looking at these charts and we're trying to determine the likelihood of the euro getting stronger or weaker. And so right now we have demand in play. So over the short term, okay, remember short term is multiple hours and multiple days. Over the short term, forecast would be to the upside. All right. But after that, we're going to contact a descending trend line and supply. So once that supply is contacted, the short-term forecast would be to the downside. All right. So this is only going to be a short-term move to the upside if this demand zone holds. If this demand zone holds, likely short-term move to the upside about up to here and potentially even higher. Okay. So that is what we're seeing. Now let's look at the other markets to see if they are expressing any type of move like that as well. So we're in Euro Aussie, all right? And what we're seeing is some strength here. Why are we seeing strength in the Euro Aussie? Is because the Aussie is a lot weaker than what the Euro was, okay? And when we were looking at the Aussie, we could also see that the Aussie had more room to drop, which means the Aussie has more time weakness. And at the same time, we're looking at the Euro, and the Euro is inside demand. And we were saying short-term strength on the Euro. So what do you think that can equate to in terms of what we would see on this chart here? It would equate to more upside, right? Okay, so let's just adjust something here. Fix this. Update my analysis here. And let's see here. Tough one. I think it's like this. Okay. That is what's happening here. So there's nothing here. Okay. What were we saying? Don't get long unless demand is the dominant force and there is no supply. There's no supply here and demand is the dominant force. So this is telling me that the chart is likely going to go higher, which tells me we're likely going to get some strength in the euro or continued weakness in the Aussie. And that is what we are seeing. So that's in line with what we are seeing. So that's great. EUROCAD. So what are we seeing with this one? It's been coasting sideways for many days. So we're not really seeing anything that could help us here. Euro pound, we're seeing a little bit of a move to the upside, but this is not the greatest chart to be judging strength off of. So I'll move on to Euro Japanese yen. Price was dropping. We've seen some weakness. Well, euro was weak as well. And now it's hitting some demand on the lower time frame. So demand on the lower time frame, does that not equal a shorter term move to the upside? Yes, it does. So check mark that. Euro Kiwi, what are we seeing? Well, we're seeing strength because of the weakness in the Kiwi. Can it continue higher? It could, but there's been a lot of ranging here, so there's nothing to really dictate that. So really, the one thing that's really working for us right now is the Euro Aussie in terms of it being aligned. We are expecting. Okay. So short-term move to the upside in Euro is likely. Okay, very likely. Bitcoin, you want to take a quick look at Bitcoin? We can do that. Quick look. It shot up to the upside, and 33 was definitely the area of buying, right? How did that work out? When price was up here, what did we say? Price, the only place I'd buy it is down at 33s, okay? And if I bought it down at 33s, my target would be here at 52. So it's on its way up there. Now it's pausing. Does it continue from here over the longer term? Okay, multiple weeks, multiple months. Yes, it should hit. It should go higher. But over the short term, it can drop. Okay, who's to say it's not going to drop? It could drop right now. All right, so who knows? it's up there. It's already made a move. Longer term continues up, but shorter term it could drop. All right, ladies and gents, so what are we at, like 24? We can get that up a little bit higher if you guys don't mind. If you appreciate the work that I put into this analysis, and believe me, the analysis takes me a long time. I put a lot of effort into the analysis every single weekend, and you know, like I said, it takes a lot of time away from my family and for other things that I could be doing, but I put a lot of work into what we do, into the analysis, and yeah, if you appreciate me sharing it with you here on the YouTube for absolutely nothing, then I would appreciate a like. And yeah, we'll leave it at that. Okay? So enjoy the rest of your day, and we will talk to you soon. We'll see you inside the Telegram channel. Take care, everyone.